Hey guys, it's Tanner Manson from Future Investing, and today I want to tell you guys about the most important advice that I've ever learned while investing. It's possibly the only advice that you ever need while investing. And this is not clickbait, and I'm not going to wait till the end of the video to tell you. It's simply this: buy great companies and hold them for the long term. That's it. That's the whole video. There's a very famous saying in the investing world where it's 99% of your time you have to do absolutely nothing, and only 1% of your time do you have to do absolutely critical thinking. And it's so true. You look at Warren Buffett, for example, the best investor of all time. It's not like he's some crazy technical analyst and, he doing all this with numbers and charts and everything like this. This man, into the early 2000s, picked his stocks off of a newspaper. Okay, he didn't care what the price was 30 minutes down the line, an hour, whatever. It was just learning about companies, learning about what they do, the managers who own them, and just understanding the business. That's the main core of investing. And he wasn't buying these fringe companies. Some of his best picks ever were like very simple companies. Ripley's Chewing Gum, Coca-Cola, See's Candy, Geico. These are normal companies that everyone sees day to day, but yet most of the people who will tell you how to invest are going to say, oh, you need to look up this very fringe small cap company, or this very, no one's ever heard of this company. This is the next big boom. It's not necessarily the way that you have to do it. There could be value in companies that you know day to day that just people might not be looking into as much. And that's the whole idea. Is once you truly understand a company and you can explain it to a 5-year-old, you can be able to purchase those great companies and hold them for the long term. Every single one of the greatest investors of all time all say very, very similar things. Buy companies with huge convictions and hold them for the longest of terms. Don Valentine, this is actually sort of a very niche market of investing. He was the founder of Sequoia Capital, the #1 biggest venture capitalist fund in the world. And they said forever that the best returns that they could ever get to their clients were the ones that they held for longer than a decade. Just to help you believe me, I'll give you some of the stocks that they have on their list here. We have companies like Apple, Google, Oracle, Nvidia, GitHub, PayPal, LinkedIn, Stripe, Yahoo. Just an insane amount of absolutely insane companies to these days. What would happen if at the time of IPO during Apple, or even before that, they got in during like the seed rounds before they were even public, okay? If that they were to sell it a year or two or whatever to go buy something else, you would not have been part of the biggest company of all time. What if you did that with Nvidia? Or PayPal or LinkedIn or any of these companies? You would not have seen the development that they've seen over multi-decade periods. And that is the trick to investing. I don't believe in active trading or trading stocks very quickly like that, because even Warren Buffett goes, you know what? Yeah, it's fun to look up stocks and buy and sell them and make a couple $100 here or there. But I mean, the real money, to get from $1,000 to $20,000 to $20,000 to $600,000 to $600 to, 20 million. Like, these take long, very planned out plays of select stocks and very focused stock investing too. It's not like, Warren Buffett, spreads out all of his investments across the S&P 500. He's always said that diversification is like the defense against ignorance. For the people who actually know what they're doing, the best thing to do is to buy individual stocks that the true ideas of them and what their potential is. And that's easier said than done, and I absolutely understand that. Like, to pick the next biggest company in the world is not something that you just stumble onto. But the only way to get there is just purely through research, looking up, studying finance, and eventually you might get your first multi-bagger stock. That stock like Amazon, for example, or Apple or whatever, where it goes from $100 to $3,000. And yes, it can take 10, 20 years to get there. But absolutely, you're going to make so much more doing that than you ever would have trying to buy and sell stocks all the way up. Okay, for every single long-term investor that I will talk about, there's no way that you're going to be able to name that many day traders or that many options traders or anything like that have to be that successful, like the Warren Buffetts of the world, like the Charlie Mungers of the world. Like, I could go on and on. Jim Rogers, Peter Lynch, Chamath Palihapitiya, there's just so many. Bing, 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 bing. Like, even people that, we look up to today, like Cathie Wood, for example, or Chamath, even though they're the very modern style of investors these days, it doesn't mean that they don't hold stocks for the very long term. I mean, maybe if you watch Chamath, for example, you've heard of the All In podcast. It's this very famous podcast that he's on. The biggest thing that they always talk about is letting your winners ride. Let's think about that for a sec. Like the stocks that you're up the most, okay? Not just trading it because it's gone up a bunch, but holding it because that is a winning stock. And that's not going to work every single time, right? There's going to be some like sporadic, momentum stocks that just shoot up for a short period of time. But for the the biggest ideas is that usually the companies that can take 100% growth year over year can consistently do this. You have to find the sales forces of the world where these CEOs, these founders are dedicated to making this the next biggest company in the world. Those are the stocks you want to hold and find them early. It's going to take some time. I'm not offering you guys a slam dunk stock today. Obviously, that's easier said than done. But the idea is that whenever you find that stock, and trust me, I am so I've made my mistakes of selling my winners early as well. And I'm sure if you've been trading for a year or 2 years, you probably have already had it by now, where you've purchased a stock, sold it, and now that's gone up since you've sold it. And if you ask any investor, okay, even myself, I don't think I've made very many mistakes while investing, but the one continuous mistake that I've always made is that I've sold too early. Even Warren Buffett says it all the time. The biggest mistakes he's made is not by not buying companies, but it's by selling them too early. It's very, very hard to determine how hungry that CEO or founder truly is for the success of their business. You see something like Tesla, for example, where, they're struggling along and having very hard years in 2017, 2018, and then, the continuous push and the amount of effort that Elon Musk put into that company, then you finally see the rewards pay off and the stock go from like $200 a share up to $4,000. Okay. And that's pre-split. Right now it's like, 800-900, or actually, well, now it's starting to drop. But the idea is that before then, yes, you could have been trading this stock between the 150s and 300s, and that's still a lot of money, but that's nothing compared to getting it from 300 to 4,000. That's truly where the true investors have found their money. It's off of a couple of picks. That Warren Buffett saying, where if he gave you a stamp where you could only put in 20 stocks over your entire lifetime, 20 investment purchases, he said you would think very, very hard about the choices that you made and you would get extremely rich off those choices. And he said by the end of your life, you probably wouldn't even have used all 20 punches in your punch card and you would have lived an amazingly successful investing career. There's 3 big mistakes that Warren Buffett always talks about. One is selling a stock because the price plunged. This is maybe the worst reason to sell a stock ever. Because unless the actual fundamentals of the business or the reason why you sold the business changed at all, then there should be no reason for you to think about selling. If anything, it should be an opportunity to buy more. I know I'm going to bring up a lot of Warren quotes here, but like Warren also talks about, imagine this schizophrenic guy that walks up to your house and he goes, "Oh, your house is worth $300,000. And then you're like, okay. And then the next day he goes, "Oh, your house is worth $290,000. The next day he goes, "It's worth $280,000. Are you going to panic because your house, you now think it's being worth less and less just because this man is saying so? I mean, the same rule applies in the stock market. Just because people are bringing down the price, if nothing's changed fundamentally, then the business is still the same. The underlying reason of the stock, of why you purchase it, hasn't changed. There should be no reason to sell at all. In the short term, the stock market is a voting machine. In the long term, the stock market is a weighing machine. Okay? I don't care about the opinions of others. I want to see true fundamentals come out and the profits of the business grow. That's really, at the end of the day, what I want to see. Now, the next reason why people often sell is because the price has raised too much. Okay? It's raised the price very, very high, very sharply, and so they sell. And everyone, including myself, is very guilty of this one. At first, this may not seem like a bad reason to sell, but the truth is that although this price may spike up just like Tesla is from, whenever it was back at 200 up to, the 4,000 mark that it was not too long ago, do you really think that it could drop back to $200 a share? So the idea that selling it just at a high point for it to go all the way back to its original price, you may never see that price again. And the third last reason of a terrible reason to sell is whenever a billionaire or hedge fund sells. And I mean, this works even if it's Warren Buffett or Chamath or Cathie Wood. It doesn't necessarily mean that the stock is bad. This could be to fund a new purchase or to do stock compensations or anything. They're full-on working businesses, so they need capital at certain points, and they'll sell stocks just to be able to do so. Sure, if a billionaire sells a stock that you own, it might be a really good time to investigate and actually research why they might be doing this. Has there been any news that has been released or, whatever, but don't just immediately panic button and just sell. I'll give just one more example before I go. Brad Gerstner. the founder of Altimeter Capital, who's returned 30% compounded annual growth rate since 2011, has also said that if you just purchase the top quartile of tech stocks and hold them for the long term, that you will outperform the S&P 500 by great amounts. And now that's specifically about the tech industry, which is not my full point, but the idea is to just, if you hold great companies and not worry about it, and just let those things sit. It's why everyone who buys the S&P just outperforms everyone else is not because it's the best investment. It's just because they don't have to worry. They don't panic sell. They don't do anything. They just buy and they hold. And those people outperform anything. So in my opinion, investing can go two ways. You can either try to have fun, in which trade all you want. But if you want to become a millionaire or, someone who's very successful in investing, there's only one way to do that, and that's buy companies and hold them long term, and that's it. I don't know why people want to overcomplicate the stock market so much and make it seem like it's this crazy mathematical game. The truth is brands and just strong companies go a long way. It's why Warren Buffett's biggest picks are Coca-Cola and Apple and all these different companies that have strong names. That's the funniest thing about this. People who are worth billions that have everything that you guys could possibly want, and they're buying stocks that are right in front of your face. That's the whole video, okay? Buy great companies and hold them long term. And I know a lot of you, won't end up doing this. They'll end up buying companies for a short amount of time. But for the few of you who can honestly take this as oh, maybe I should look into this, good for you. Good luck going into the future. And I wish you guys all the best. Anyways, I appreciate you guys watching the video as always. I didn't even say it at the beginning of the video, but if you could, like the video down below and subscribe if you want to see more content like this. I know this video is a little bit more off scripted than my other videos, but it's something that I've always wanted to make a video on because it's the most important thing that I've ever learned about investing. And that one thing alone, holding companies way past when I should have sold, or not should have, when I wanted to sell them, has made me so much more money than anything. Anyways, thank you for watching. Hope you guys stay safe trading, and I'll see you on the next one. Bye now.